However, they are essentially criticizing Tesla for its inability to control not just the auto industry, but also the software market. And they do think that the Dojo supercomputing system will be essential to Tesla's potential to increase its market dominance in the stock and investing sectors. There's one name that keeps coming up: Tesla. Recently, investing in Tesla has been an incredible experience. As Tesla's stock declined from its 52-week highs, there was some volatility. The problem is that it had not only exceeded the performance from the previous year, but it had also broken records in 2020 and 2021. The stock remains still below those all-time highs in spite of this. It's important to remember, though, that Tesla is now in an upward trend and is situated near the bottom of a potentially profitable channel. The main query at this point is whether Tesla can survive in the present market environment. Rising interest rates have been hurting growth stocks, but if these sectors continue to do well, it might be the ideal storm for Tesla to rise as well. Things have changed somewhat since Tesla's July 19th earnings report. The stock was having a difficult time. As of August 16th, it was down 21%. After the second quarter results released in the middle of July, the downturn started. Despite excellent year-over-year sales growth of 47% and an 83% increase in vehicle deliveries, it appears that not all investors were happy. Let's now explore the thoughts of bulls and bears. While some people think Tesla's stock will rise, others don't think so. To offer you a complete picture, we will examine both sides. Positively, Tesla has a number of noteworthy advancements in store. These include the eagerly awaited introduction of the Cybertruck, the energy industry's ongoing expansion, and the exploration of new markets. The confidence of analysts such as Ben Carlo over the second half of the year has already caused the stock to rise. What is the conclusion then? Is Tesla able to get past its current problems and hit a record high by December? Will it end this month with a 20% increase? The stock of Tesla has experienced significant volatility. It reached notable peaks, particularly in 2020 and 2021, which raised the bar for the business. It's important to note, though, that Tesla is presently trading below those all-time highs. Nevertheless, there's a positive indication: a continuous upward tendency. As if it were creating a channel, the stock is at the bottom of it right now. Here, the larger market context is quite important. Tesla is frequently linked to growth equities, which have been hampered by rising interest rates. Surprisingly, though, a few of these growth stocks have managed to hold on to their strong performance despite these challenges. This begs the question: could this be the ideal scenario for Tesla to rise once more, assuming growth stocks can thrive in the current climate? An interesting feature is that a lot of investors are fixated on the short-term swings in Tesla's stock price. Nonetheless, the business has been taking important long-term actions. One good example is Tesla's recent statement that it will be offering more reasonably priced versions of its high-end S and X models. Tesla is aiming to attract a wider spectrum of customers by providing these more affordable variants, which could lead to an increase in its market share and sales volume. The competitive environment that Tesla faces, particularly in China, is another important reason. China is a vital market for electric cars, and there is fierce rivalry for Tesla. In this competitive sector, where multiple local manufacturers are fighting for market share, price wars and aggressive marketing tactics have become the norm. The article also mentioned Tesla's heavy reliance on government funding and the fact that the business has posted net losses almost every quarter since launching its first electric vehicle in 2008. It's important to examine these ideas with some skepticism and not treat them as gospel truths, even though they might represent some experts' beliefs concerning Tesla. A complex web of interrelated elements, such as investor mood, market dynamics, and technology breakthroughs, affect Tesla's trajectory. Despite obstacles in the short term and divergent views in the financial community, many people still have faith in Tesla's long-term ability to transform the auto industry and make significant profits. Tesla's stock had a significant spike, increasing by over 5% in response to analyst Ben Carlo's positive analysis. He clarified a number of encouraging developments for the manufacturer of electric vehicles that are anticipated in the second part of the year. The much-awaited unveiling of the Cybertruck took center stage among these advancements. Carlo highlights that the storyline of Tesla in the second half will be mostly driven by price reductions and their effects on margins. He noted that in addition to the introduction of the Cybertruck, other drivers that might spur a rise in Tesla's stock include the wider acceptance of fully autonomous vehicles, the company's continuous development into new industries, the potential for an AI day, and growth in the energy sector. Tesla's strategy for product offerings is unique. Tesla has chosen a different route from traditional automakers from countries like Detroit and Germany, who have taken satisfaction in providing customers with a wide range of options, from car types to trim levels, colors, features, and options. Tesla reduced the number of variants available to consumers by streamlining its offerings. Standard features, interior options, a constrained number of trims, and a muted color scheme are examples of this. Surprisingly, Tesla is not the only company using this strategy. Chinese electric vehicle manufacturers have also achieved success by providing a more constrained range of car options. This tactic is justified by the idea that providing an excessive number of options may impede assembly and raise other production-related issues. Essentially, investors and customers alike seem to find Tesla's ability to succeed with a more constrained product portfolio to be a differentiator. This has helped to create a bullish sentiment surrounding Tesla's stock recently, along with a number of interesting innovations in the works. When one considers how automobiles are assembled, the benefit of simplicity becomes clear. The assembly process gets more difficult and time-consuming when a manufacturer receives 100 customer orders for the same car model, but each order differs greatly in terms of configuration and extras. On the other hand, Tesla's simplified strategy, which offers fewer build options, has worked well. Several up-and-coming EV manufacturers as well as Tesla's Chinese rivals support this strategy. Tesla's ability to meet and even surpass record-breaking monthly production and delivery targets is indicative of its steady expansion. Even as competition heats up, Tesla continues to lead the EV industry as it has for a long time. Due to rising competition, profitability, and market share may encounter some difficulties, but Tesla still has a sizable advantage. Chinese electric vehicle (EV) startups have achieved significant success in the last year by adopting a similar concept. These businesses are still expanding. Analysts credit this increase to international mileage and emissions laws, which are propelling the use of EVs. Tesla and these Chinese businesses are anticipated to continue to have a significant presence in international markets in spite of growing competition. Moreover, the Infrastructure Investment and Jobs Act, which was passed in August 2022, has stimulated significant investments in the electric vehicle sector. More than $92.4 billion has been invested by manufacturers in American EV and battery plants. According to market data, U.S. production capacity has grown rapidly during the previous 6 months. Over 4.7 million new passenger EVs will be produced yearly by U.S. EV manufacturing facilities by 2026, making over 36% of all newly sales vehicles. These U.S. factories alone will be able to produce enough batteries by 2027 to power 12.2 million new electric vehicles per year. Yearly, or 95% of all new cars sold. Although many detractors compare Tesla to conventional automakers, many feel that this is an unfair comparison. For example, Norway and the United Kingdom are among the new nations where Tesla has installed V4 supercharging dispensers. In Europe, a number of V4 stations have been built, and more are planned. Another step in Tesla's commitment to improving EV infrastructure is these V4 charging stations. What do you think about the trajectory and valuation of Tesla? Please feel free to comment below. For more updates like this, don't forget to like the video and subscribe to our channel.